Namaskar, my name is Shishir, and we are going to talk about retail inflation based on Consumer Price Index. Ministry of Statistics and Program Implementation has come out with the latest data on the retail inflation, and that data shows that retail inflation in the month of October slipped to 0.25%. This is lowest in the current series. What exactly is the current series? Current series is basically with the base year of 2012, and the data on the current series was started in January 2015. So in this video explainer, we are going to talk about what were the reasons for this kind of inflation rate, what are the things which we are going to see after this inflation rate, and can we expect the same trend of inflation rate in the coming months? So these are few issues which we are going to talk in this video explainer. Let me start with the first, that is what is the headline? The headline says very clearly that retail inflation based on consumer price index dipped to 0.25% in the month of October. And it was 1.44% in the month of September 2025. And it was more than 6% in the month of October 2024. Now your question will be, what are the reasons for that? There are three reasons for that. Mainly there are three reasons. One is, of course, the favorable base effect. What exactly you mean by the base effect? Base effect is basically 6.6% plus in October 2024. And if there is a reduction in the prices of various goods and services which are being factored in calculating retail inflation, if that price change is very high, then or the price reduction is very high, then the base effect will play a major role. And that is what it has been. That is what we are seeing in the current inflation rate, and from 6% to 0.25%. And on an annual basis or the monthly basis, it is from 1.44% to 0.25%. So the first question, the first part of the answer of the question, why it happened, that is the favorable base. The second, which is a very important one, that is the prices of fruits and vegetables. If you see the entire data set, then you will find that the food inflation is continuously in the deflationary zone. Deflationary, that is the negative inflation. So for 4 or 5 successive months, we are seeing the food inflation. That means the prices of vegetable, the prices of fruits, the prices of various other food items are showing decline. And more important, the most important one is the vegetable. And at the same time, the prices of cereals, of course, they are in the positive zone, but still it is on the declining trend. The only concern there is the edible prices, where we are not seeing any kind of relief. But apart from the edible oil, most of the food items are in the deflation zone. So the second reason for this kind of inflation is very low food and vegetable prices, or in other words, we can say food inflation. Now, the third factor is the GST rate rationalization. GST rate rationalization was brought into effect from September 22nd, 2025. So October is the first full month of GST rate rationalization. And many of the processed food, many of the manufactured items, there we are seeing lower inflation because of the GST rate reduction. Many of the items which were earlier in the range of 12%, they have been brought down to 5% or nil. Many of the items which were in the 28%, they have been brought to 18%. And one of the most important item here was the automobile. So there the automobile, earlier it was 28% plus cess. Now it is flat 18% there. So there is a clear reduction. And important thing here to note is that not just the finished product, not just the GST rate on the finished product has been lowered, but also on the component that has been lowered, and that is giving a comprehensive rate reduction for the automobile sector. So the third reason for lower inflation rate is the GST rate rationalization, which came into effect from September 22nd, 2025, and October was the first full month of GST rate rationalization. Now, the next question will be, what next? What will happen? If I go by the various reports by various research agencies like SBI or Barclay or Nomura, they all are saying that in the month of November, the rate of inflation is likely to be at this in the same range, while the disinflation in various vegetable items, in various fruit item, or overall food inflation will continue to be in the negative zone. Overall, the headline number for the November could be in the range of 0.3% to 0.4%. That means the same rate of inflation will continue. Now, the next question will be that can we see any kind of change in policy interest rate? Monetary Policy Committee under the chairmanship of RBI Governor is scheduled to meet next month. And there is a strong possibility that when the inflation rate is at this level, 0.25%, then RBI led Monetary Policy Committee may go for a rate cut, policy interest rate cut. And that is very important at this moment because considering the impact of US tariff action, many sectors of the economy are looking for cheaper credit. Of course, during the year, we have seen a rate cut of 100 basis point. But the expectation is that since the inflation rate is at such a low level, this is giving an opportunity. But at the same time, there is one problem. The problem is that if RBI reduces the interest rate, then the deposit interest rate will also come down. And that is the worry in a sense that when the banks are not in a position to get the deposit because you are getting higher interest rate in post office saving schemes or in say mutual fund or in say stock market. So why you will come to bank? People will divert resources there. So banks may have the problem of not having enough fund to support the credit growth. That is one concern is there. Another concern is that can we continue with this kind of lower inflation range? Most of the economists are saying that it is not a very sustainable thing because just need to go through the cycle, what we call as the virtuous cycle. A virtuous cycle means one good is leading to another good. That means the consumers are demanding, producers are producing. But the question is that producers will produce only if they have certain kind of profit. And if the prices are low, that means the profitability will also be affected. Then the producer may not find it very profitable to produce something. And then the virtuous cycle could be affected. That is one concern also. So there are two issues of the lower inflation. One is, of course, what will happen to the bank deposit. And the second one is that, is this a sustainable one? Is the lower inflation is a good thing for a longer period? Certainly not. From the economics point of view, you need certain inflation so that the producers are also in a better position to produce a good, or they find it slightly profitable to produce any good. When they are producing, then only they are going to supply in the market. When they are going to supply in the market, then there will be meeting the demand. And when they are meeting the demand, that will lead to another production cycle. But the entire thing needs one critical factor, that is a certain amount of profit. And considering this kind of inflation range, there is an apprehension that the profitability may be affected. Another factor which is related to that is what will happen to the tax collection. So if the prices are low, and since the GST is what we call as the ad valorem, that means the GST is levied at the value of the good. That means when the prices are low, the government will lose money. So on the one hand, because of the GST rate reduction, already collection is expected to be affected. And when you are going to have the lower value, that will have another dent to the overall tax collection. So these are some of the concerns, but overall, from a policymaker point of view or from the government point of view, lower inflation is always considered as a very good thing. But again, I'm saying that there are some concerns also. So this is what I wanted to explain to you about the number, the headline number, which is the retail inflation based on the consumer price index. Thank you very much for watching this.